Hi guys, have you ever heard about global financial crisis before? So basically, what is the global financial crisis? The global financial crisis refers to when the world faced an extreme stress in global financial markets. That happened from 2007 until early 2009. The crisis occurred in the United States before spreading all around the world. Many banks worldwide faced huge losses and relied on their governments for support to avoid bankruptcy, which led to a great number of people becoming unemployed. But what were the reasons exactly behind the global financial crisis? This question is a bit complicated. There were many contributing factors and it was a complicated incident. Prior to the 2008 crisis, the economy in the United States was showing a robust growth. For example, the low interest rate, high liquidity, and rapid growth in financial innovations. There was pressure to sustain high rates of return on investment, and banks tried their best to satisfy customers. However, the supervisions and regulations were later on weakening. Banks provided supreme mortgage to borrowers with weak credit histories. These supreme borrowers were mostly known as the ninja loans, meaning the debtors have no income, jobs, or even assets. Now, the bank needed to secure their position, so they sold the debts to other parties. Banks then went to insurance companies and paid premiums. But the outside parties did the same with the insurance companies, and the insurance company promised them coverage in case of default. This naked CDS has no direct insurable interest. The percentage of naked CDS keep on increasing, and as of 2007, it was $62 trillion. American International Group was one of the biggest insurance company at that time, and was considered a huge threat to the American economy. Were there any strategies that were taken to overcome the global financial crisis? Actually, several tactics were used to resolve the situation. Governments developed fiscal stimulus programs to boost spending and infuse cash into the economy. Example, tax cuts, greater public investment, and cash transfers to people directly. Monetary policies were implemented to boost liquidity and lower the interest rates. However, there are many critics who argue that there were no meaningful reforms. The logic was, when the government increased the money supply, they lowered the interest rates, which leads to inflation. One example is like the case of President Barack Obama. Obama campaigned on the promise of implementing a large-scale economic stimulus package to jumpstart the economy. While it did help stabilize the economy and prevent a deeper recession, some critics argue that the level of stimulus was not sufficient or targeted effectively. So, as a Muslim, we might wonder, what has Islamic finance learned from the global financial crisis? Islamic finance can also take a lesson from the financial crisis by developing more standardized products. For example, they can create standardized financial instruments that are simpler to comprehend and manage. As a result, financial transactions could become less difficult and more accessible to a wider variety of investors. Besides that, Islamic finance should avoid short-term thinking and focus more on the long-term sustainability. This might be done by developing financial instruments based on the actual economic activity that encourage long-term development and stability. Not only that, Islamic finance should emphasize more on the transparency and moral behavior. To achieve this, it is necessary to ensure that all the financial transactions are transparent and all the parties involved are informed of the risks and all the potential benefits they received. Then, how exactly can Islamic finance implement the lessons from the global financial crisis? First, Islamic finance should have a fair financial transactions. It is prohibited in Sharia law to exchange one loan with another loan. Hence, selling a debt for another debt is against Sharia law, and it is not fair by nature. Islamic finance outlaws the bare selling of debt and risky speculative financial business operation. Second, Islamic finance should use equity rather than using debt as its foundations. Lending activities are built on the concept of asset-backed. As a result, mortgage loans under such system would therefore have been supported by a strong structure that protects the banking sector from potential loan defaults. Third, all the potential investors and other parties must comply with the Islamic regulatory control system, in which everyone involved in the business transactions must be aware and acknowledge all the potential risks. A crucial factor that caused the global financial crisis is the lack of a sufficient and effective regulatory control structure that monitors, and as a result, protects the interests of investors. Hence, the financial institution must adhere to a strong disclosure and transparency rules, and risks must be effectively conveyed to all stakeholders. As a conclusion, there are many lessons that Islamic finance can benefit from the global financial crisis. The past history has taught us many things and led Islamic finance to make changes in many perspectives. Despite the horror crisis that happened, somehow it has also given us the benefit for Islamic finance. That's all from us. I hope you will benefit from our presentation. Wassalamu alaikum wa rahmatullahi wa barakatuh.